Good afternoon and welcome to the Signia Monthly Market Review. My name is Gregoire Sharma and I'm the Fixed Income Fund Analyst here at Signia. August saw a continuation of the recovery from the lows reached back in March, with the majority of risk assets posting positive results and investors shying away from safe haven assets. Equity indices ended the month in positive territory, particularly in the US, with the S&P 500 having its best August since 1986, up 7%. The Nasdaq, buoyed by the large gains in tech stocks, was up 9.6%. Japanese equities also had a good month as the Nikkei generated 6.6%, whilst in Europe the DAX climbed 5.1% and the Euro Stoxx 50 returned just over 3%. The pickup in COVID-19 cases there clearly having an impact on markets as a number of countries imposed quarantine rules. It was more of a mixed month for global fixed income as the Bloomberg Barclays Global Ag Index ended the month down 0.72%. Risk-on assets such as global high-yield credit produced positive returns on the back of continued support from central banks. Indeed, the Bloomberg Barclays Global High Yield Index was up 1.4% in August, whilst the Bloomberg Barclays Global Treasuries Index was down 0.95%. Inflation expectations have been rising as a result of the enormous coronavirus stimulus measures taken by central banks around the world. In the US, as nominal yields have been capped, real yields have kept turning increasingly negative, which has led to a bear steepening of the US dollar yield curve and the resulting weakness we've seen in the US dollar. The US dollar index was down 1.29% this month and has fallen over 10% since the highs in March this year. The weaker dollar this month was also partly attributable to a move higher in the euro following the July agreement by the EU member states for a fiscal stimulus package. The euro strengthened above 1.19 US dollars for the first time in 2 years, finishing August up 1.4%, while sterling rose to 2.2% against the dollar. Finally, turning to commodities, oil had a strong month, with WTI and Brent crude generating 5.8% and 4.6% returns respectively. Silver was one of the highest performing assets, ending the month up 15.4%, whilst copper climbed 6%. Gold, however, was down in August as investors moved into riskier assets. That's it for the month, and see you for the September market review.